On the Spot with Michelle Makori is brought to you by Prime XBT.
Hello, I'm Michelle Makori. Thank you for joining us. We are just days away from a highly anticipated decision by the Federal Reserve, and markets are pricing in a nearly 100% chance of a quarter-point hike following the meeting next Wednesday. That's according to the CME FedWatch tool. But what can we expect after the July meeting, as inflation, according to the government's latest data, shows signs of cooling, with June CPI at a two-year low of 3%. Meanwhile, the odds of a recession are falling. Goldman Sachs economists have trimmed the estimated probability of a US recession over the next 12 months to 20% from 25%. And investors and economists are wondering if maybe, just maybe, Fed Chair Jerome Powell may actually be able to navigate a soft landing. Well, my next guest says do not count on it. In fact, he says we are actually already in a recession, despite what the traditional indicators suggest. Todd Bubba Horwitz is the chief market strategist at 𝗣𝗵𝗺 which he founded nearly 20 years ago to provide research, insight, and analysis for traders. And he himself has 40 years trading experience across a range of markets. In fact, he was one of the original traders in the OEX, and he helped start the SPX. He's also the author of several books and also hosts his daily podcast, The Bubba Show, and of course is a fan favorite here on Kitco. Welcome back, Bubba.
Michelle, great to be with you. It's our first time, and I'm excited to be here.
Yes, I personally have not had the pleasure of talking to you yet, so I'm excited to do that. We do have a lot to cover. Of course, I want to get your macro outlook, your forecast for gold, silver, equity markets, and oil, and also have you weigh in on some political developments here in the US. But let's start off with inflation, because according to the Bureau of Labor Statistics, inflation in the US cooled sharply in June. The consumer price index rose 3% last month from a year ago, and that's the smallest increase in more than 2 years. The core measure, which excludes food and energy, was up 4.8%, and this was also the lowest advance since 2021. Now, Bubba, to me, it doesn't really feel like inflation is cooling, but what is your read on this data?
Can we call bullshit on the readings? I mean, really, let's look at the big picture. And I always encourage everybody to look at their own personal spending. You know, when I go to the grocery store, my bills, item for item, are up over 60% over the past 12 months. Prices are not coming down. Interest rates are going up. The economy is getting weaker. We continue to give away things to everybody but the American people. The middle class has gone from 62% to 41% of the economy. So you tell me that inflation is coming down, I say that's impossible. And it's more of government numbers manipulated, which has been the case forever. You know, they make them curve fit what they want, and when they adjust them later, nobody understands, and nobody hears that they adjusted the numbers to a different number, just like the jobs numbers that readjusted every single month. The economy is in trouble. We have a lot of problems that we're dealing with, and of course, the middle class is getting tortured, as has been the case for many, many years.
Okay, Bubba, just to confirm here, are you saying that the inflation numbers, in your opinion, are intentionally manipulated, or that they're not an actual real reflection of the situation that Americans face?
I want to cue that they're intentionally manipulated. What I will say is that they are not correctly correlated to what really happens in an economy. The food and energy, which is the number one cost for every American, except if there's an emergency, but daily expenses, food and energy, which are considered too volatile, are what we spend our money on. And those have not come down. Those are going higher. And we're only fortunate that crude oil is lower because of lack of demand, which tells you how weak the economy really is. Whereas when crude oil goes back to where it should be, which is probably over $100 a barrel, what do you think you're going to be spending then for gas? Again, the government does not have the right formula. We're using things that are antiquated and not up with where we are technologically.
Yeah, you're certainly not the only analyst to say that the inflation data that we receive from the government is not an accurate reflection of the situation on the ground. And as I said, it certainly doesn't feel that way to me. But nonetheless, Todd, these are the numbers that the Fed uses to decide whether or not to hike. And as mentioned, the markets do see a 25 basis point hike for the next meeting. and expecting a pause thereafter, given that it appears that inflation is cooling. What do you expect?
I expect at least 25 basis points next week, and I think that they're going to continue to hike. I believe that the 10-year notes are going to get to 6%, which is the key benchmark for mortgages and everything else. The Fed is nowhere near done because they're nowhere near, they have no intelligence when it comes to common sense. Yes, they're very smart and educated, but when it comes to common sense and understanding the consumer, they have no clue. And they're going to continue to hike rates, which is ridiculous, into what I call a recession. And no Federal Reserve has ever hiked rates into a recession in history. But of course, the Fed has been devaluing the currency and pumping up a phony money supply for 100 years. So why would I expect that to change now?
Okay, so you're expecting a hike in July. And last time we heard from Powell after the June meeting, he did signal that we should expect at least 2 more rate hikes for the year, or 2 more rate hikes for the year. Is that in line with what you're seeing? At least another 50 basis points for 2023, or even higher than that?
I think higher, but at least 50. Let's go there. At least 2 hikes, if not 50 at the next meeting. You know, again, if the numbers are as hot as they say they are, well, then the Fed needs to do something about it, right?
Well, hang on. I mean, they do have the print of 3%, which does give them leeway to say we don't have to hike that aggressively because, look, we got inflation under control. It's 3%. The target is 2%.
Right.
Arguably, that gives them some room to maneuver and keep it at 25 basis points and perhaps pause and reevaluate again.
Well, I don't think we're done with the artificial numbers that we're seeing. And I would suspect that we're going to continue to see more hiking and more going up because, again, it is my opinion that they want to get the 10-year notes to 6%, which puts mortgages at about 10%.
So you think it's likely that we'll see a 50 basis point hike at the next meeting?
I said there's a chance that there'll be 50, depending on what the date is between now and next week. But again, they're continuing to be aggressive for absolutely no reason whatsoever because they do not have inflation under control. Again, I ask you just to check your own grocery bill, and we can start from there. All we have dropping right now is the price of used cars, not the price of gasoline and not the price of food.
Well, that is why then they're continuing to be aggressive. If, as you say, inflation is not coming down, doesn't that then justify, at least in the context of the Fed world, to continue raising rates?
No, it does not. Look, there's 2 types of inflation. There is good inflation, which is through growth and through demand, right? Supply and demand. And if you're an economics student, if you go through a supply and demand curve, when there's a demand, prices should go higher. Our prices are not going higher because of a supply-demand curve. Our prices are going higher because we have idiots running the Federal Reserve and the government that continue to hike prices and taxes. We're paying more taxes now than ever, and they're only going higher. So, we're trying to fund this ridiculous war in Ukraine, which is a joke. I mean, that's nothing but a profit center. We have politicians that have no regard for the average American, and there's the problem. So we're spending and paying out more money, yet bringing in less. And I can assure you that most Americans, especially of the middle class, are not living as well as they did years ago.
Yeah, that's for sure. So, Bubba, just to recap, you're expecting rates to be where by the end of the year?
I'm expecting that the 10-year will be at 6%, which puts the Fed fundings rate probably at 7 or 7.5.
And then the question is, what does that mean for the economy and for the markets if it does get that high?
Well, I think the markets are going to melt down. Now, again, I'm going to give full disclosure at the moment. And not only am I always long equities and hedge, but I am long the markets here because, again, I'm not going to fight what is known as the tape or the trend. But I do expect at some point, and may not be this year, but I expect that we're going to see a market haircut of 50 to 70% before it's all said and done. This is no different than the 90s. This is no different than 2001. This is no different than 2008 or 87. We are well above our skis, and we're not facing the headwinds that are coming. And believe me, they're coming as we watch small business be destroyed. We watch people that can't get help and wages that are going higher. So what is going to happen here? It's going to be a disaster when it's all said and done.
Okay, definitely need to circle back to that market estimate of yours, down 15 to 70%. Before we do that, though, I do want to focus more on your macro outlook because we do have the odds of a recession falling, at least according to the dominant economists. Now, keeping in mind that markets expected a recession in the first half of this year, that didn't happen. Now we have Goldman Sachs economists trimming the estimated probability of a recession in the US over the next 12 months to 20%. That's down from 25%. You've said recently, Bubba, that you think we are already in a recession. So what do you mean by that?
Well, I mean, again, your dollar goes a lot less. People are struggling to pay their bills. Look at the amount of credit card debt that we are looking at now. Forget about the numbers because numbers change, depending on inflation and other factors. But look at how many people are at the limit on their credit card that are paying the minimum amount of payment, which is really what we would call usury rates, right? People are not getting out. The average American can't scrape together $400 for an emergency. We're not earning anywhere near the amount to keep up with the cost of inflation. People on Social Security, their numbers are nowhere near. They're starving. They're working at Walmart now. People that are in their 80s have to go back to work because they can't afford to live. So you tell me that we're not in a recession, and I go, really? Again, remember that when economists or when brokerage houses speak, they're not always speaking in the best interest of the people. More often than not, they're speaking in the better interest of what their idea is and what position they want to set up. So if they tell us that the economy is good, so people are going to start, let's say, buying stocks again, maybe they really want to sell stock instead of buy stock.
Now, look, fair enough. You do make some valid points, and I'm certainly not necessarily disagreeing with that position or outlook. But just to play devil's advocate here and to push back with some of the data that would indicate otherwise, the definition of a technical recession is 2 consecutive quarters of negative growth. US GDP increased at a 2% annualized pace in the first quarter of the year. That beat market expectations. That was up from the previous estimate of 1.3%. In the fourth quarter, the growth rate was 2.6%. We still don't have the data for the second quarter of this year. And the US unemployment picture, that continues to look resilient. Payrolls climbed by 209,000 in June. That was below economists' forecast, still a healthy pace. The unemployment rate fell to 3.6%. Average hourly earnings rose 4.4% on a year-over-year basis. Now, granted, unemployment is a lagging indicator. Totally get that. But you take that data, you take the idea that US consumer sentiment is apparently not letting up either, rising to an almost 2-year high in early July, with the University of Michigan preliminary index up by 8.2 points to 72.6. That's the highest since September of 2021. We've also got the housing sector booming despite the increase in purchase rates, purchases of new homes rising 12.2% in May. That's the fastest annual rate in more than a year. And home builders should have been hardest hit by the Fed's tightening, but instead they're performing very well due to the housing shortage. So more homes are being built. We've also got many of the country's top banks, JP Morgan Chase, Wells Fargo, Morgan Stanley, Bank of America, reporting great quarters. So we put this data together and look, it does look seemingly strong. When you look at that data, what do you say to that?
Where do I start? Okay, we'll start with jobs. The jobs number is total crap. It is garbage. Okay, first of all, when you use the U3, which is 3 months back, it does not give the complete picture. Go look at the U6 and see how many people have dropped off the payroll, the roll. Okay, jobs are nowhere near what they're telling us they are. You have more unemployed. When's the last time you went into a Walmart and could find anybody that would help you? People are not working. Okay, we're seeing more homeless than ever. All right, look at what's going on in San Francisco. Look what's going on here in Las Vegas, where I'm at. You drive down the street in the middle of the night, you'll see over 100 homeless laying on the street in just one area. Again, The overall economy is in big, big trouble. I don't care what the numbers they want to give me. Listen, numbers never lie, but the people who report them can make them look good. U3 is garbage. U6 is where you want to look at. You really want to get a true read. As far as the housing, if housing is so good, I'm in one of the hottest housing markets in the country in Las Vegas, yet I'm getting notices every day, $10,000 discount, $20,000 discount. How much do you want? We want to sell these houses. We can't sell them. Building here, which was building everywhere, has slowed. You can drive and find that the builders aren't there. The structures are partially built, but they're not being built. We can always hide behind sentiment. And the biggest thing here, this is a greed factor playing out in the markets. That's why consumer sentiment is so high. Remember this. If I had told you 5 years ago that you could get 5.25 or 5.5% on a CD, you'd have kissed me and jumped at it and said, I want it. Give me all my money. Today, everybody's saying, oh, that's not enough. Why? Yeah. Because the stock market continues to go up. Mind you, only a few stocks are really driving the market. In fact, it's been so bad that the NASDAQ has to rebalance to make it right. So again, we can always look at the numbers, but look at your neighbor, look at your own spending, look at what you're doing, and then tell me how accurate you think the numbers are. And of course, Michigan sentiment is based on 5,000 people. The numbers that we use, the systems that we use are so antiquated that we're still using the Phillips curve. It's a joke what they do with the numbers. But again, that's what they are, and that's what people listen to.
And Bubba, that's why we have you on for that very passionate debunking of that data and those numbers. But let's focus on the markets. I've heard you say that this is the final rally and that you do expect a big crash. You just mentioned that now, but the markets are rallying. I mean, year to date, the S&P 500 is up around 19%. The Dow is up almost 6%. The NASDAQ is up over 37%. So markets are looking good. What is happening here? Why are the markets showing so much resilience, particularly when forecasts going into this year were calling for a major downturn by the second half of the year? What's going on with the markets?
Greed. Greed is going on with the market. People are chasing into the market. Remember one thing. Markets are very dull. Volumes are way down from where they should be. So dull markets tend to drift higher regardless. This is in history. This is where we've been. When you have no volume, you have no sellers participating. This appears to be a retail rally, which means the retailers are buying. And we know, remember, when there's a lack of any real action, markets will go up because every single day, 401k money pours into the market, IRA money goes into the market, fund money goes into the market. But I think the actual real traders are watching and letting the retailers push this market higher so that when they are ready to sell, you will see this massive meltdown. You will see from greed, we will rotate back to fear. But as long as the retail trader is greedy, and you have a lot of people that are buying stock they can't afford, they're using leverage right now. And of course, that's pushing markets even higher. But we've seen this movie many times before. And I give you 87, 2001, 08, and now. And we'll see what happens. But again, this is not a final score. And again, when the real volume comes back in and we get to start real action, and when Goldman Sachs gets in the right position and JP Morgan gets in the right position they want to be in, you can bet that this market is going to start to head south.
Are you out of the markets at the moment? Where are you?
I am never out. I am always long equities in my IRA, my 401k, my profit sharing, but those are always hedged. I use derivatives to hedge my long-term investments. My short-term, with the markets going up, I'm not foolish. I'm going to stay long the market. Listen, I have an opinion, and I do believe we're going down 50 to 70%. But from where? Is it today? It's not today because we went up again today. I will stay long in this market until I see the trend changes and a reason to short the market. And everybody will have plenty of time. There is no need for anybody to panic because I said we're going down big. The markets will signal and they will leave a footprint showing you that they have reached a top. And so as far as now, they have not reached the top yet.
Okay, so firstly, when you say 50% to 70% down, from where?
Well, I would expect, my take is the Dow is going to see about 19,000. Okay, we're at 36,000 now, or 35.5 right now. The S&P, I think, is going to trade about 1672. We're at 4,500. So those are the numbers I'm looking for on the downside. And that would be the percentages depending on where we come from. I mean, my numbers could raise higher as a percentage of sell-off because, again, I'm looking for those two numbers to come into play before it's all said and done.
Right. Now, you said that the markets will signal when we're at the top. What would that signal look like?
Well, I mean, they're not going to, obviously, markets don't make announcements, right? They don't announce what they're going to do. But when you look at it, if you look at a chart and you start to see a market, for example, making lower highs, right? And the rally is done, and you start to see the decline versus the incline we're watching right now, that will be a signal that it may be time to evaluate your positions. Some of the fundamentals, I'm not a fundamental trader, but some of the fundamentals in companies will start to change. Some of the numbers will start to change. Now, typically, when this happens, you have the retail buyer will be buying the dip because that's what they're trained to do, is to buy the dip. But the next dip, if we start to turn over, will be bought and it will go lower. And people will continue to try to buy the dip because it's always rallied in the past. And that is always the trap that is created by the market itself.
All right. So, Bubba, what is the market reaction if the Fed does hike 2 more times? I mean, one hike is pretty much priced in. That's not going to be a big surprise. But what if there's a second hike, which is what Fed Chair Powell is signaling? What do you expect?
So I don't think the market will have much of a negative reaction. I think if there's let's say there's a 50 basis next week, I think that would create a very negative reaction. Now, I'm not saying there's going to be, but I think the chances are better than 50% that they go 50 basis points next week. If that happens, I think the markets get a little bit panicking, and you could see a pretty significant sell-off. Now, whether that sell-off holds, we won't know yet, right? We'll have to see the reaction to that sell-off, because we know that on next Wednesday, the market's going to make 3 large moves, up and down, and then where it's actually going to end up with. But I think 50 basis points next week creates a lot of pressure on the market and could really be the trigger to start taking it lower.
Right, but you don't think that that's what's going to happen. You don't expect.
I think it's a coin flip that they're going to go 50 basis points. 25 basis points is priced in, which is what the market already assumes.
So you're saying there's a 50% chance that we're going to get a 50 basis point hike next week?
Yeah, I think it's a real coin flip, 50-50.
Wow.
Again, we could see some data in the next few days that would force the Fed's hand. They've already made this ridiculous commitment to hike rates into what I call a recession. So they could certainly go to 50 basis points if needed.
And that is not going to sit too well with the markets because they've sort of adjusted for the 25 basis points, but not the 50 basis points, Bubba. So if we do have the Fed rate going up by another 50 basis points, maybe 75 basis points, that brings us up to what, 6%, that range. What does that mean for the economy? What impact does that start to have on the real economy then?
Well, I think the real economy is already in trouble. I think it just makes it worse. Again, you look at the debt that the United States is servicing alone. You look at the debt that the consumers are servicing. Their rates are only going higher, which means that they're going to have less spending capital to go out and then put into the economy. This is the problem when you hike rates into a bad situation. You take money away that would actually be spent on goods and services going forward. And the more that we make the middle class struggle, because let's face it, the middle class is still the driver of the overall market structure and the economy. And if they start to struggle worse, it's going to be bad news for businesses. And we're already seeing a destruction of small business, which is intentionally done by the administration in power right now. So again, I think that you have a lot of issues that will start to create that big sell-off that I'm looking for.
Okay, I need to touch on that point you just made. You said small businesses are intentionally being harmed by the administration right now?
No, of course.
Elaborate on that.
Well, I mean, when you go back to COVID, why was Walmart, Walgreens, Costco, and everybody else allowed to be open, whereas your local pharmacy down the street, who you would prefer to go to, was forced to be closed, or your local grocer, who you would like to go to, was forced to be closed? The regulations and the rules are not in the benefactor of small business. They are meant to be for big business, because if you can see what's going on, the United States is on the verge of turning into fascism or communism. Okay, because that's what this administration is doing. Look at who's in charge: Google, Facebook, or Meta, you want to call them. The big companies are in charge. The little guys are melting away and going away. And of course, this administration said, big business, pay more taxes. Well, they're supporting big business because they do pay the taxes. So it's a big ruse, is my opinion.
Well, and obviously small businesses are very correlated with liberty and freedom, Bubba. So do you think that's the agenda here, to intentionally create more dependency on big businesses and more dependency on government and more consolidation of power? Do you think that is an intentional agenda of this administration?
100%. I think that this is, if you watch what's going on and you see the amount of power that the Biden administration has given up, first of all, to Saudi Arabia with oil. We have enough oil in this country without affecting the environment for 300 years at current usage. Okay, but yet we're buying from Saudi Arabia. The carbon footprint has not changed. We have given China basically carte blanche, okay, to accelerate their 100-year plan to take over the world. And the sanctions on Russia are laughable, okay, because Russia is flourishing because of the profit that is being made out of this ridiculous war in Ukraine. So they are intentionally, in my opinion, the squad and Biden and et al. Are intentionally trying to destroy small business and the middle class, bringing us all down into dependency to big business and government.
All right. I mean, during the Trump administration, the U.S. was energy independent, net exporter of oil. And as you say, now with the Biden administration's effective war on domestic oil and gas production, we're sort of out there cap in hand asking the Saudis for oil, which many question the wisdom of that move. But just to circle back here, just to make sure we're understanding you correctly, you think that this is all by design, that this is all intentionally malicious. You know, there's that expression, Bubba, don't attribute to malice what can be ascribed to stupidity. Clearly, a lot of errors, at the very least, that we could see having been made. But you think that this is a malicious intention here and an agenda?
In my opinion, this is meant to be what they call the Great Reset.
Yeah.
Okay. And in my opinion, in this country, there will be another revolutionary war if this continues at this pace, because there's a lot of divide purposely created by this administration. Separate, conquer, so you can conquer, and divide them. You already have Texas and Missouri trying to get gold as a currency in their states. Okay. We've seen what's going on with the BRICS nations. There's a whole big problem here that has been intentionally done, in my opinion.
Right. For our viewers that are not familiar with the Great Reset, it is one of the agendas of the World Economic Forum, best described as you will own nothing and be happy, an agenda to completely reset the financial system. But can you elaborate on what you mean by the Great Reset?
Well, I mean, they want to create communism or socialism. One of the isms other than capitalism in the United States, they want to take away the opportunity for the next Steve Jobs or the next Jeff Bezos to be born out of nowhere, right? They're trying to make everybody on equal footing so that the big government and the big money get everything and the rest of the country gets nothing, okay? And again, as you said, like it, right? Marie Antoinette, let them eat cake. Okay, that's what they want to create. They want us to have nothing. They want taxes out of everything. And they're trying to bring this country to a screeching halt. Just look what's happening again all across the globe and what they're doing. Not one thing has been a benefactor or benefited the United States of America.
Now, when you say they, who do you mean by they here?
The Biden administration. And listen, the Republicans are no different. They're no better. But right now, the Biden administration is in charge. And our political system is corrupt and broken. Okay, that's what we really have as a major problem here. Is they're too busy taking payoffs from other areas. I mean, where do you find a business that takes two raises, one during COVID and one during a potential recession for Congress? Okay, yeah. That shouldn't be happening. They should be working for the people. But of course, the federal government was never meant to be the world's largest employer. The federal government was meant to be an overseer. If you look at the Constitution, government is run city, county, state, with the federal government as an oversight, not as the number one employer controlling all the money and controlling everything else. This is an absolute ridiculous situation that we're getting ourselves into, and it's being made a hell of a lot worse with this current administration.
Well, let's focus a little bit on politics now, because we are seeing an interesting trend amongst some of the candidates for president in 2024. And that trend is promises to back the US dollar with hard assets. We had Democratic presidential candidate Robert F. Kennedy Jr. saying that he would back the greenback with hard assets like gold, silver, platinum, and even Bitcoin to stabilize the economy. He was speaking at a Heal the Divide PAC event, and he stated, and I'm quoting him here, backing dollars and US debt obligations with hard assets could help restore strength back to the dollar, rein in inflation, and usher in a new era of American financial stability, peace, and prosperity. And he says he would start small. Perhaps 1% of issued T-bills would be backed by hard currency, by gold, silver, platinum, or Bitcoin. Interesting that he puts Bitcoin in that sentence there, and it is a plan to return to the hard currency standards. He also promised to exempt Bitcoin from capital gains taxes when converted to the USD. So Bitcoin becoming an interesting campaign position here. And on the other side of the aisle, we've got Republican presidential primary candidate 𝗍𝗵𝗺𝗲. He also wants to restore faith in the US dollar, promising to back it with a basket of commodities. I interviewed him about a month ago, and he said he would back the dollar with a basket of commodities like gold, silver, nickel, and others. So a lot to unpack there. But firstly, what do you make of this trend that we're seeing presidential candidates acknowledge that the dollar needs to be backed by something? What do you make of that?
Well, the fiat currency system itself, as it is today, is fraudulent. Okay, it is a bunch of the Federal Reserve and central bankers around the globe rotating, making their currency worth less when it's all said and done. Okay, this has been going on for 106 years, or 110 years now, I guess, 1913. So, but again, when you look at the entire situation, it's very bad. And I go back to the Bretton Woods Act. Alan Greenspan was against coming off the gold standard when we did. And of course, the minute he became the Fed chair, he was for the being off the gold standard because it gives the Federal Reserve too much power of currency. This is what the BRICS nations are doing now. They're going to a gold-backed currency, which everybody talks about how bad it is, but it's not bad. It's exactly what should happen. Currency has to have some backing, or it's worthless. It's worthless as the paper that it's printed on, or the new digital currency they're going to go to. Okay, this has to be. We need to have some sort of backing, because otherwise it gives government and central banks too much power to reduce values, and again, just kind of kick the can down the road. You know, we keep waving down debt because, again, it doesn't matter. The dollar is always worth less because the Federal Reserve keeps pumping in money into the money supply.
Right. And arguably, they're not going to want to give up that kind of power because it allows them to print without many consequences.
Hopefully one of these candidates who wants to do it will get it done. But again, you know, unfortunately, the government here has been promised a lot of things over the years. And I go back to the infrastructure has been promised to be fixed in every election since I've been alive.
Yeah.
And yet 0 presidents have done so.
What candidates say on the campaign trail and what actually happens if and when they get elected, we've noticed is not always the same thing, unfortunately, Bubba. But let's talk about this idea. Should one of these candidates win, or perhaps another candidate adopts a similar strategy and maybe is compelled to do this in response to the BRICS, if they do actually go ahead and back some kind of joint currency with gold or other commodities? Still not entirely clear what the plan is there. We do know that the BRICS, Brazil, Russia, India, China, and South Africa, are gathering next month in Johannesburg, South Africa. And there is speculation that they're working on some new global reserve currency. And at least according to some reports from the Russians, it will be backed by gold, but it's still not 100% confirmed there. But let's assume that this can happen. Is it feasible? I mean, does this fix the problems in the US economy? Can the US dollar be backed by gold? What kind of ratio would that even take? What would that even look like if this is even feasible?
It was backed by gold originally, right?
But not since 1971, sure.
You know, you could take a dollar bill that had silver certificate, you could take it into the bank and get a silver dollar.
And that's why Nixon took us off the gold standard, because people started to redeem dollars for that, and there just wasn't enough precious metals to justify that backing, and hence they were curtailed from spending as much as they would like to. So, I mean, is it feasible to actually go back to some kind of commodity-backed currency, or do you see it in some kind of like diluted form, as is suggested, like maybe a partial percentage of treasuries or currencies?
It could be a basket of commodities that could back the dollar. I mean, certainly we need something to back the dollar to stop the activity that the central banks, the Federal Reserve, and governments can do with the currency, because really all they're really doing is fleecing the people or their citizens, because they can reduce, they can take the $100 bill that's in my pocket and reduce the value, by hitting a button, basically. And this has to stop. And I would agree 1,000% that we need something to back it. Now, is there not enough gold? There's not enough silver. There's not enough platinum. Create a basket that's going to back it. And what is the ratio? That's hard to say. I mean, the original ratio was 15 to 1. Okay. Now, again, is that going to remain? I don't know that we could do that, but certainly even if we set a benchmark as of today, okay, what is that benchmark? At least everybody knows what the value of that currency is worth compared to the basket of commodities that is backing it.
What do you make of the idea that Bitcoin has been put in here, along with hard commodities like gold, silver, and platinum, at least by Robert Kennedy Jr.?
Well, I'm a believer in Bitcoin, okay? I think that the crypto world is, I call it the currency of the libertarian, okay? Because again, cannot be, we know that there's always some funny things going on with all these different cryptocurrencies, but Bitcoin is proven to be pretty steady. Ethereum has been proven to be pretty steady, okay? And I think that they are real currencies, or they're real commodities anyways. And of course, the CFTC has recognized that, and we all know, or maybe not all, but the ruling last week from the SEC and Ripple, okay? So that has been deemed as either a currency or a commodity. I think that it's a real source that does trade 24 hours a day, 7 days a week, okay? So it has a real market behind it, okay? And if you're going to use it as a basket, would have no problem with that, because I do own it. And I do believe that it is real. And I do believe that it's going to play a much bigger role. I think government has tried to stop it for years, and they failed at every turn, which is why now you see the Bitcoin and Ethereum traded actively as futures contracts on the Chicago Mercantile Exchange. You see a lot of ETFs out there right now. You've got Coin, which is a broker, but if you have cash in Coin, it is guaranteed like a bank. So I think that it's only natural in the natural rotation.
Right. Well, Bitcoin, of course, is what is seen as the solution to the currency debasement and devaluation that you just spoke about, and that we've certainly seen and witnessed. Many of the Bitcoin maximalists would argue that you can't put the other cryptocurrencies in that space, and that Bitcoin has very unique properties, like a limited supply and fully decentralized, amongst others. So we can't lump Ether and Bitcoin into the same category, at least in terms of the sound money argument. But it is very interesting that Bitcoin is gaining more and more traction in terms of a potential real alternative or complement to the US dollar in order to prevent debasement and devaluation. And Bubba, you did call it steady, so I'm going to have to take issue on that, because it's been many things, but it hasn't been steady in terms of volatility of prices. Right. I mean, and that's...
But it's a business. Again, when I say steady, we're not talking about price. We're talking about that it operates every day. It hasn't had to close down. It hasn't been to run the bank. That's what I mean by steady.
Okay, got it.
It's a very volatile, as markets can be at some point too, right? I mean, when the volatility picks back up in the stock market, we'll say the stock market's very volatile. Right now, the stock market's sound asleep and just goes higher every day. But Bitcoin has been volatile. It has calmed down over the last number of months, but certainly it can be very wild. And again, the moves can be much bigger because the markets are still very thin and not quite as liquid as everything else is yet, right, because there are many who do not believe. And of course, most American trained economists do not believe in the cryptocurrency. They are against it. So that is keeping the lid on it, of course, until it becomes easier for elderly to function and deal with. They're not going to open up an account somewhere where they have to remember a 72-digit password. Right. So when we get to that point and it becomes easier for everybody to operate with, I think it'll become a much more stable and much more steady, and there'll be less volatility in it.
Right. Just wanted to qualify what you meant by steady there, but fully understand that. But let's talk about the Bitcoin price for a second. It's up, around 80% year to date, trading at around $30,000 now, give or take. What's your outlook on Bitcoin, Bubba?
I think let's say
for the next 6 months.
Well, I'm long Bitcoin. Not only do I own it through a wallet, but I'm long it from the CME futures. I see that I think we're going higher. I think the next benchmark price will be probably 35 and then 40,000. Again, I don't like to make gigantic projections because I really don't know how the overall market's going to react, but it would not surprise me if we're at 35 or 40,000 by year end.
Okay, that's not such a drastic leap from where we are at the moment. Let's focus on something that we definitely know you are an expert in, and that's gold. Where do you see gold going? I mean, earlier this year, you called for gold to hit new highs in 2023. Now, technically, it did. On the COMEX gold futures, it hit a new record high of $2,085 an ounce. That was in May. So technically, you were correct. But many people have been disappointed that gold is just not able to breach that $2,000 level and stay there, that it's now back below $2,000. What's your updated price for gold for the end of the year?
I think gold will probably, by the end of the year, probably 2,200. Okay. 10%. I think that gold is very strong. You know, one of the issues that we deal with in markets is, again, typically when markets get around these big whole numbers like 2,000, it couldn't hold it, it couldn't sustain it, and then it got hit below it and sold off pretty hard. But now, once again, we're building a nice base here between 1,900 and almost 2,000, right, going back and forth. I think the next time through, I think we get to 2,300, and I do see a close by the end of the year at probably 2,200 plus.
So what do you see sending gold to $2,200 plus by the end of the year?
I think there's demand. I think you're seeing some demand. You know, again, remember, there is a lot of pressure when markets are very slow and there's not a lot of capital for the average investor to invest in. They have to be careful. So we know there's always some natural pressure on metals by the banks as they try to keep prices lower, and people will call it manipulation. I just say there's not enough buyers to take them out right now. But I think as we start to see maybe some struggles, maybe some problems, maybe some other things in the world, I think you'll see that gold will break out, and then technically the trend will turn to higher, because right now in the short term, the trend is a little bit lower. But I do think that it will turn the trend, and if we can get back over 2,000, I think you'll start to see a flood of buyers start to show up, and suddenly it'll start going up versus turning sideways.
So you thinking that on the one hand, the Fed is going to continue raising rates for the second half of this year, but at the same time, you still think gold is going to hit 2,200 by the end of the year, because so far the rate increases have been negative for gold.
Well, they are historically, but again, we have to remember that correlations are not always immediate, right? Yeah. What is the price of gold actually conning as their interest rate? Are they at 6%? Is it based at 5%? Is it based at 7%? We don't know that answer. It's a very similar question of when the dollar goes down or goes up, people say, well, commodities are going to go down. Well, that's not necessarily true, because we don't know the specific correlation and what that asset class is pricing at right now, because they may have already priced in 6.5% into gold. And that's what it is. So even if it doesn't make 6.5%, then gold could go screaming higher. Again, we don't know where everybody sits and how the pricing mechanisms of price discovery have priced all these assets out yet.
Right. Now, Bubba, you said that in terms of your sense, we are actually in a recession, but in terms of the traditional indicators of a recession, when do you think that will happen?
Probably not till next year sometime. I mean, again, we have an election coming up, which is always a little quirky. I don't think we've seen any major meltdowns during an election year. Now, again, this could be different this time. We'll see what the markets actually do. I mean, the markets are extremely overvalued and really being driven by just a few small companies, not small companies, but a few companies, right? This is not a broad-based rally. This is a rally that is driven. So could we see a major sell-off into an election year? You could. Again, I can't predict how everybody's going to react. I know what they look at historically here, and I know that the markets go up historically 8.5% year over year, and I know historically the markets are due for a pretty nasty correction, which is what I expect. But there are some things in the way here. It doesn't mean it won't happen, though, and I think it'll depend on how the election looks, how the politicians do, and who actually become the actual choices to run against Biden, if Biden is even going to be a candidate this year or next year.
Well, he says he is. He maintains that he's going to run, although many question how he's going to run if he can barely walk. But yeah, we'll see how that one plays out, Bubba. But let's talk about what your outlook is for silver then, because if we do have a recession, that usually has a negative impact, at least on the industrial usage for silver. Do you have a price outlook for where you see silver by the end of this year?
Yeah, I think silver will be in the mid-30s by the end of this year, which is a pretty significant rally.
Yeah, it's at what, around $25 now?
25, 26. I think we'll see a 35 to 40% rally coming up over the rest of the year. I think that, silver has been very much depressed. We've seen all the bad press clippings of what some of the things are doing. But I do think that you're at prices. And again, I think that money is going to be searching for homes. And I think that the commodity market, and precious metals are commodities, they're hard assets, but they're commodities just the same. I think we're starting to see some breakouts in the commodity markets, and I think that's where a lot of money will start to flow, and certainly no better place than gold, silver, or platinum.
What do you think is the catalyst to get silver to $30 by the end of the year? What would need to happen?
Well, again, I think there's a lot of pent-up demand that's out there. I think that if the economy starts to show some weakness, people are going to look for the poor man's gold or the precious metal of silver. I think that there's a lot of reasons to believe, that we've watched over the years. I mean, we've seen some pretty wild swings in silver, from $49 to, back down to $6, back up to 35, down to 12. And I think this is just a market that is, relatively thin and relatively doesn't trade. But when the buyers decide to come in and new money starts to come in, which I believe that will be the case, I think that will be the catalyst because it will feed upon itself. And usually most of these big rallies will start with short covering. And I think that's what you see when the pressure is finally erased. You see first a real strong explosion up, then a little retracement. And if it's real, it's going to then gather steam and start to go higher again.
Okay, and this market correction that you're expecting, you're not expecting that by the end of this year, correct?
If I told you an answer, I'd be lying. I don't have an idea when it's going to start. All I can tell you is that by reading the charts every single day, which I do, I will have an idea when it looks like it's going to start, and I will have some benchmarks that will give me the best idea. It could start tomorrow. Okay, it doesn't. Again, we're not going down 50 to 70% in one move. This is going to be something. If you go back to the most recent collapse, '08. '08 went down, then we had a big rally, came back. It went down again, and we started to make consecutive lower highs. And of course, finally, it gave up the ghost in October, and you saw the volatility expansion and the markets get hammered then. Although they went on to make lower lows the next year, that was the big move. That was in October, November of 2008.
So, Bubba, you're saying you're going to see gold at $2,200 by the end of the year. You're going to see silver at around $30 by the end of the year. And you're going to see the Fed hike at least 2 more times by the end of the year. And of course, that's going to have all of those consequences that we discussed earlier. Is there anything that you think could happen that derails your thesis? Is there anything that happens that makes you say, well, completely going to change my mind here?
I don't think so. I think that, the markets are pretty much, set up to do what we think they're going to do. Now, it may take a little bit longer, but I go back to when I was on the trading floor and back in 87. I mean, it was evident that in August of 87, the markets were going to collapse. They didn't collapse until October, but it was evident that they were going to. And 01 with the NASDAQ was no different, nor was '08. There's plenty of warning signs out there that we choose to ignore. And again, I go back to what I told you earlier, the greed factor of the retail investor right now, because they're not involved, they're not interested in taking 5.5% on a 3 or 6 month CD right now. It's not enough for them. They want more. And of course, we know what greed does when eventually markets melt down.
All right, so Bubba, whether we're already in or near a recession, the yield curve is inverted, stocks are near all-time highs, inflation, at least according to the government numbers, is getting closer to the Fed's 2% target again. So in this mix, where do you see the best value and investment opportunity?
Well, I think gold and silver are great opportunities right now. I think commodities in general are great spots to look for because I do expect a big market in commodidies.
All commodities?
Well, I mean, grain markets, I expect to see a big market. They finally had a turnaround. We've finally seen some positive action after just getting hammered and actually taking them below the input cost, the cost to plant. So I look for those to start to explode higher. I think that, again, if you're a true believer in the United States, then, look for some depressed equities. Certainly I would not have a problem, even with my thesis of buying the spiders or the Qs, some of the bigger ETFs, because I'm going to hedge them anyways and protect them. But we do know one thing for sure, Michelle, markets in history have gone up 8.5% year over year. And since 1950, they've averaged 10% gain year over year. Not every year, but the average gain is what you do. So you have to be investing money that you can afford and not need for the rent payment or the mortgage or the car payment or food. And that money will grow over the next 10 years. No matter what happens, no matter if I'm proved right or wrong over the next 2 years, over the next 10, that money will grow. So wherever you want to choose it, just make sure whatever you're looking at is fundamentally strong and that you believe that it's a company, if it's a company that'll be in business. And I think it's gold and silver and platinum, which I think is the greatest value right now. Platinum, I think, is just something that you can buy and hold, but you have to be able to not worry about selling it tomorrow. If you're forced to sell it, you're buying on borrowed money, you have no chance. You're going to be forced to sell it. And when you sell it, it's going to be at a loss because you're going to be selling it out of panic.
Why do you think platinum is the biggest opportunity here right now?
Well, platinum's got a lot of uses besides, industrial, domestic, jewelry. I mean, it's been so depressed. It's really amazing when you go back and look in time. Platinum was over gold for an extended period of time. Now it's almost half of gold. So to me, that's like on sale, half price. So I'm willing to step out and buy platinum because I don't think the demand or the need is going to go away for it. And I think that it's going to be part of this whole basket of precious metals that may be a backing of any currency. So I think that it's a very solid investment at these levels.
So would you say that that's your highest conviction point, that platinum has?
Well, I don't have one. I mean, I own grain. I bought grains. I own platinum. I own gold. I own silver. Those are all in physicals, right? Those are all. I'm not touching them. My kids will sell them when I die, right? I'm never selling my gold. I'm never selling my silver. I'm never selling my platinum. When I drop, my kids will take care of it. They'll sell it right away. But in the meantime, those are great investments. Again,
hopefully you'll teach them to not sell them right away.
Well, I teach them, but listen, investing is a game of delayed gratification.
There you go.
You're looking for instant gratification. You have no chance to make it as an investor. Don't waste your time or your money because you'll lose it. You have to be able to invest what you can afford and put it into a market which you like, that you believe has a solid future. And unless something changes to change your mind, then you continue to buy into that asset class.
Well, you know what they say, Bubba, delayed gratification is all the more sweeter. Finally, I want to get your thoughts, seeing as we've touched so much on politics. There is a potentially positive development, some kind of bipartisan agreement here that I want to get your thoughts on. We had Democratic Senator Kirsten Gillibrand and Republican Senator Josh Hawley this week introducing bipartisan legislation that would ban members of the federal executive branch and lawmakers from owning stock in individual companies. And this bipartisan bill would include severe penalties, including forfeiting any profits from stock trading and fines of around $10,000 or more. It would still permit ownership of mutual funds and broad industry and index funds. What do you make of that? I mean, proponents of the bill say that it's going to help restore public trust and prevent politicians from taking advantage of insider information. We do know that, for example, Nancy and Paul Pelosi have had tremendous success in the stock market.
Amazing, isn't it?
Amazing. So, what are your thoughts on this bill? Do you think
it'll actually get... I think it's 100 years too late.
But do you think it could get passed?
We're dealing with an administration, okay, and we're dealing with politicians that are more interested in lining their own pockets than taking care of business. Now, they could be pressured to do so, but it's hard to say if they can get it passed or not unless they can get it to the Supreme Court, because at the end of the day, it's 100% needed. This inside trading that is illegal to everybody else, except if you're a politician. And we all have heard the stories through COVID and through other things. It's a very bad situation. It needs to be rectified. Hopefully, they will have a conscience and pass it and take care of it. But if not, hopefully it'll go to the Supreme Court and it'll get passed through there, because it needs to be done. This inside trading for Pelosi, and she's not the only one. I mean, we all know the story of the Fed chair that got caught as well. They have to stop when people have too much information ahead of time that can actually vote legislation that will help their portfolios.
Well, how does it land up in the Supreme Court? I mean, usually
if you violate it illegal to have insider trading and somebody's got a rule on it, it could get to the Supreme Court. It depends on how they approach it all, right? First, it's a vote. If they get a bill on the floor, then it's a vote. And if the vote doesn't pass, if they try to make it law and there has to be a decision made, it could end up in the Supreme Court, just like the debt did from student debt that got bashed down by the Supreme Court.
Yeah, but the student debt forgiveness, that was an executive order passed by President Biden that the Supreme Court said he didn't actually have the authority to pass. Now, the Supreme Court can rule that something is unconstitutional and change a law or a bill that has been passed that gets voted on by the House and the Senate and then goes to the president. But then how do you see the Supreme Court getting involved in this potentially?
Well, right, but we can have a law. I mean, there is a law about insider trading. It just does not include senators and congresspeople. They could change that law.
Okay.
Again, there's a lot of fancy things that go on here, and of course, this is one of the big problems.
All right. No, I'm just clarifying that you're talking about taking it from a different angle in terms of expanding the insider trading law, as opposed to this bill, landing up with the Supreme Court, because that's obviously not the process there. But it is refreshing to see that there is something that does have bipartisan support. So we'll see how that one plays out. Going to try stay positive.
We'll see how much support he has when it gets voted on. That's when we'll see how much support.
Yeah, well, I'm trying to stay positive here. I'm trying to stay optimistic, Bubba. Bubba, on an optimistic and positive note, you do have a special offer for Kitco viewers regarding 2 of your books. So share that with us, please.
Yeah, I've written 2 books on options, Bubba's Guide to Trading Option and Bubba's Guide to Trading Weekly Options. If any of you would like a copy, I have a PDF file. I'd be happy to send you. All you have to do is just email me at @𝗫𝗵𝗵𝗃trading.com, and I'll be happy to send you the PDF file of the book. And it's if you want to buy it, you can go to Amazon and buy it as well. It's at Amazon.
All right, but we are going to have a special giveaway for some Kitco viewers that the first 10 to email you are going to get that free PDF. So, Bubba, thank you so much for that offer. And as always, thank you so much for sharing your very passionate opinions and positions and insight and analysis with us. Really appreciate it. It's been a pleasure. Bubba, thank you so much.
Thank you, Michelle. It's my pleasure to be with you.
All right. Thank you. And a big thank you to our sponsors, Prime XBT. A reminder that there's also a special offer for Kitco viewers in the description of this video. If you are watching us on YouTube, please make sure to check that out. And also please make sure to subscribe. For me, Michelle Makori, and the rest of the team, thanks for watching, and we'll see you next time.
Begin your path to financial freedom. Gain up to a $7,000 bonus on us. Register and use promo code. Deposit and enjoy a 7% bonus. Available now. Link in the description.